Welcome back to Full Culture Crypto Show, where we bring blockchain to the block. Now imagine walking up tomorrow with realizing your entire crypto portfolio is gone. What would you do? Panic, quit, or smarter? Today we're getting a masterclass on how to come back from zero with strategy, clarity, and a game plan that anyone can follow. And just to be clear, this is not financial advice. It's strategy, education, and perspective. So always do your own research. So this is episode 6 with D Bird. What's going on?
We're here, back at it, starting from zero. How can you do it? What's the mental mind state, emotional mind state? How can we come back from nothing? It's gonna be an interesting one.
What portfolio?
Yeah. So if your portfolio disappeared overnight, how would you feel? I mean, you're gonna have feelings of panic, which is normal. Might even have feelings of doubt about, what you're doing. Why did you get into it? Why did you even go into crypto? Everything everybody else said that is nothing but scams and everything. You're gonna have all these feelings coming up. So one thing to know is that this is normal, especially when you feel like you have failed. So the key thing is to recognize, like, all right, this is obviously something bad that has happened. Now, what's the next step? So, even a lot of inventors or investors, we rebuilt after major losses. So loss is natural. We don't want it, but it's a natural part of this whole progression and learning and getting better as an investor.
Question 2, how can someone turn that breakdown into a breakthrough?
Yeah, I kind of alluded to it in the first question. So you can always rebuild. And one thing, when there's a loss, look at it as an opportunity to learn and rebuild and come back smarter. So always understand, or try to understand, what went wrong and what part you played and what went wrong in you failing or your portfolio going to zero. So this is the first part. Obviously recognizing what has happened, recognizing your part in it, and now, what did I do wrong? And make sure you don't do that again. So that pain is an opportunity for you to know when you're approaching the same or doing the same actions that got you into the situation that you were before. Because there's going to be a lot of people that are going to round trip their bags this bull run, and then they're going to feel pain, and they're going to be a recluse almost, away from the world if they let this bull cycle go through and, they don't come out with it with at least what they invested in. So use that pain to fuel and to create better systems for yourself, especially on your exits.
All right, question 3, what does mindset matter more than money after a crash?
Yeah. So the reason why mindset matters more than money after a crash is strategy protects you more than money. So the reason why your mindset matters is if once you develop those systems and the strategy, the money, you can't outpace bad strategies and bad systems throwing more money on it. It only makes the situation worse. So you want to have your mindset correct and have those strategies and those systems in place in order to protect you, protect your money, protect your portfolio. So you want to also just avoid revenge trading or emotional decisions. Once again, emotional decisions that leads to FOMO, FOMO, fear of missing out. So your mindset has to be clear. You got to buy when there's FUD, which means fear, uncertainty, doubt. You want to buy, especially if you did your research at the beginning, your coin is the right coin, and you want to sell when euphoria is in. So the mindset is different. You want to switch that emotional trading into systematic trading.
What's your process to stay focused?
Process to stay focused. Yeah. So for me, I would say stick to a plan. Even write that plan down. I spoke about systems. So when you write your plan down, that could be your system. But write it down and understand what your exit will be. Even if it's not fully developed yet, write down, for example, when coin X reaches this price point, but write it down. I'm going to take 20%. I'm going to ladder out. That's the first step in the process of staying focused. You also want to categorize or journal your wins and your losses. Perhaps you do it weekly, at the very least monthly. Did you win? How is it this month? How is it this week? You don't want to necessarily look at I don't want to look at things every single day because I'm not trading, I'm more investing. So I try to choose the right coins, and I know I'm in it for the long haul, right? So with that, I wanted to say, if this message is hitting home, go to the website, fortheculturecrypto.com right now, download the free crypto starter kit, and jump into our Discord. We're getting more and more people on the Discord. Go to our IG. Dee's doing a good job at that. It's not just about bouncing back. It's about building with a community behind you. So both links will be in the description of this video.
Going into the next question, what coins or assets would you focus on first with 1K?
Yeah, so now let's say we're rebuilding. And so with 1,000, let's say we got $1,000, how would you break that up? How would you invest? For after a crash or after you have lost everything, just to get yourself off the ground, it'll probably be good to get at least one blue chip. But we're looking at majority of your portfolio, once you get back on the saddle and get back into trading, would be like your BTC, your ETH, somewhere, some of those coins are your top 10, top 15. That would be your first, your first investment after you lost everything, because that's going to be stable for you and it's in general going to go up, right? Then you want to invest that 40-ish% to your mid cap projects. So we're looking at, if you go to coin market cap, we're looking at somewhere in your 50-70 range. That's what you want. And then you want like one moonshot, which has a strong upside, like perhaps your 10% or 100%, just depending gain. So you want to include more blue chips in your rebound process, especially of your first 1K.
How would you split the stack?
Yeah, how would I split the stack? So I spoke about it a little bit before, but let's get deeper into it. So the blue chip, as I spoke about before, like 50%, half of your portfolio should be in a blue chip. Once again, this is just after you already have lost money in the market. If you're new, I might have a different suggestion for you, but we're trying to build your confidence back. So 50% in that blue chip, 30% in a mid cap. So like I said before, that 50 to 70 market cap range on coin market cap. And you will want that 20% to be that moonshot, as I spoke about before, because one good moonshot, if it hits, that'll bring all the confidence back, and that'll save your portfolio and have you to regain all of your losses. So optional, you can reserve like 10% in stablecoin or cash, just to be ready for whenever the market happens to take a dip. Even though it's in a bull market, there's always always that ebb and flow when the market could take a dip. And so you want to have some money in those stable coins. And so, in case people forgot or don't know, like those stable coins would be your USDT. They're pegged to the US dollar as a 1-to-1. So when you have that and you have it already ready and prepared to strike when you need it, that keeps you agile and able to jump into the market, get those coins that you have researched, that you know are going to be good and that you know are going to have gains in the bull market. You want to be ready to strike because it takes time in order to move your USD over to USDT and then to buy the coin. And time is of the essence. You want to strike when the iron is hot.
What criteria do you evaluate a new coin or project?
Criteria, yeah. So this is definitely what's needed. Once again, we talked about moving from emotional trading to systematic trading. So we want to look at, if we have a new coin, we want to look at the tokenomics and developer activity. So with tokenomics, are some of the tokens set aside for the developers and set aside for investors or airdrop? In general, I would stay away from a large portion or large percentage of coins that are set aside for investors or devs or airdrops. The reason is they didn't really do anything to acquire the coin, right? Especially airdrops. So for example, let's take Bitcoin, a completely fair launch. Those are things you want to look at, fair launch tokens. The Bitcoin was completely fair launched and you see where it is now. In general, fair launch tokens do better, even though crypto is volatile, but there wouldn't be a lot of people dumping it at the same time. If people get into it, they have different price levels set in their head versus a company that gets a large amount of tokens for nothing, right? So you want to make sure to look at the tokenomics. And just because there may be some or, a percentage allocated to the devs or allocated to whomever, if it's a small percentage, it may be okay. Also community support. So we talk about social media. How is that? Do they have an active community? That really tells a lot about a token. If the community is active, then the community could hide or put a band-aid over bad activity or bad tokenomics if the community is vibrant and active. In exchange presence and market narrative. So how many exchanges? So when we go through the debird method for the culture crypto, how many exchanges does this token have currently? If it only has one, you may want to hold off until we have like six lower tier exchanges moving into from tier 4 to tier 3. Then when we start to see more and more exchange presence, that will let us know like, okay, it's about time to get in and on the early stages of this coin.
All right, next question. When do you rotate or exit play?
When to rotate or exit plays. So once again, we're coming from, you lost everything, right? So when you start to see your investment be realized, you can start to ladder your profits at key growth points. So let's say your A growth point is, I want to make my money back. So let's say you buy 100 coins of CoinX, and with 50 coins or 30 coins, you made your initial investment back. That should be a growth point where you go ahead and take out your initial investment. So now essentially you haven't lost anything. And the rest of the percentage, you can then let ride at other key growth points, at other indicators, And essentially you're playing with house money. Now your confidence is back, and you're ready to go ahead and basically experience what you should be experiencing again, especially in a bull market, which is the euphoria of making money in crypto as you should. Right. So one thing to keep in mind is to never chase the top, because you're always going to be off. So don't think, if I hold off a little bit longer, I could get closer to the top of what this coin could do this cycle. Really, you want to look at indicators, and if it doesn't necessarily reach your top, you still want to go ahead and exit out. So never leave money on the table. Always take it out. After you take out with these key growth points, you can then reallocate to stronger positions, meaning you took money out, you laddered out, and now you notice another coin that was on your radar that still hasn't made it to a growth point that you have identified. You can then place money into that particular coin, and then you can ride that coin all the way up until it hits the growth point that you look at, and then you can still ladder out of that. So that would be how I would rotate exit plays.
But what happens if your pick fails again, though?
Yeah, so if your pick fails again, which could happen, right? So still plan your exits and losses. So almost like a stop loss. If this coin goes below where you're comfortable, you want to go ahead and get out of it. You want to cut your losses as much as possible. You want to save it as much as possible to then enter in when the time is right. And after you cut your losses, let's say you're looking at, if it goes down 10%, I'm making that percentage up. It goes down 10%. You go ahead and cut your losses. You review where it went wrong. Like, all right, it went wrong because I actually bought at the height of a bull market vice at a low valley within the bull market. So this is where it went wrong. You want to adjust and keep moving. So this isn't an emotional, let me get out. It actually hit that percentage, that 10%. And you notice when you researched where you failed the first time is when it hit 10% and you just kept holding on to the coin, right? Whatever that percentage is, before that particular coin bounced back. And so this isn't emotional. This is based off a system that you set up. You set up a percentage as your stop loss. And after that, if it hits it, you want to, regardless of what you feel about it, you want to then follow your system and exit out of that, and then adjust. That's what you should do.
So how do you stay resilient through setbacks?
Yeah, how do you stay resilient through setbacks? I stated that in the previous question. So remove emotion as much as you can. Emotional trading will just be terrible, right? So you want to remove the emotion, set up systems, educate yourself, set up systems, and remove emotion as much as you can. And keep the long-term vision in view. So keeping that long-term vision of, this is why I got into the coin. I'm not a trader. I don't day trade, but the long-term vision is it's going to hit this amount. I project that it's going to hit this amount. And I'm looking at these few indicators to tell me when to get out. So even if it doesn't hit the dollar amount that you have set for yourself or for the coin, once the indicators are telling you to get out, you want to get out. You need to get out. So also, to stay resilient, leverage community for guidance and accountability. Once again, for the culture crypto, you can come to us. We have a Discord. You want to leverage the community and seek advice, but especially from someone who, just as an educator in crypto, you want to come to us so we can help you out.
What are the first 3 steps someone should take tomorrow?
Yeah, so let's say all this happened, and what do you do tomorrow? I would say go to the website. That's the first thing. Download the free toolkit that we have, right? And join the Discord for connection and support. book a consult to get clear direction. Paying money for education only helps you out. Getting educated only helps you out. So you will want to do these things tomorrow to understand or to bring clarity to where you went wrong. Let's say something went wrong and you can't find the steps. So go through the steps to figure out what you did wrong. You need someone, a third party, to look at what you have done, ask those specific questions, and then say, hey, this is where you went wrong, and here's a possible system for you. How do you feel about it? What do you think would be a good system that works with your trading style? And this is how we should initially get you back in the game, because a lot of money will be made in crypto and you need to be on the winning side of it. Even after a loss, you can still be on the winning side.
What final message to leave for listeners?
Okay, yeah. What final message to leave the listeners with? So you don't need to be perfect. That's one thing. So don't strive for perfection. Just be prepared, right? You're never going to get the top of a coin, the all-time high. You're never going to get it, right? You know, it's a unicorn to get in a cycle at the lowest and then to get out at the height. You know, it's with selling 100% at the height. You know, you want to ladder those wins. So don't worry about being perfect. Just be prepared, meaning have a system and have your exit strategy, which is involved in your system. Losing everything doesn't mean it's over. It just means you had an opportunity to learn. And with that opportunity to learn, you can now reinvest. 15 max coins is all you really need, because you want to make sure you understand what's happening, where you want to exit with each coin as much as possible. So that would be what I would tell listeners. I want to leave listeners with: get educated, get prepared, and just have a strategy and a plan for your exits.
All right, man, that wraps up another episode of For the Culture Crypto. I believe that was a great episode, man. Like you said, just sign up to For the Culture Crypto. Get a free packet. Get a sit down, talk with you, so you're on the right path.
Yeah, that's it, man. Hey, I love it. I think this is pretty good. You know, bringing education to the masses. That's the first step. Next step will be, you know, getting those, you know, 5, 6 figures, 7 figures. That's where we're headed.